It's really central banking versus we the people. And that's what Bitcoin does. So Bitcoin is kind of like this Trojan horse, just like stable coins are a Trojan horse with their one-to-one backing, that one-to-one reserve status, a more secure, fully backed currency liability is better than a 0.1 to 1 backed banking deposit liability. The stable coin is a Trojan horse to the fractional reserve model. Well, Bitcoin bonds is the Trojan horse to the realm of finance and that realm of cash flow. And that is what Bitcoin does. It frees you from that system that tries to tell you how to do things, and it just lets the market, through its free market policies, dictate what is right and what is wrong.
But yeah, Griff, I'm excited to have another guest on today. We've got CJK coming on to join us. CJ, how are you doing today, brother?
I am doing very well, very blessed. Thank you guys for having me. I love what you guys are doing with the show, and I wish you continued success, and I'm happy to be on.
Thank you, sir. We're excited to have you on. Griff, let's just go ahead and open up with a question. I just want to say the letter Q again. QAnon, political things going on. Trump may or may not be the Antichrist. That's another conversation, maybe. And you know, we just recently had a conversation with G Money Pepe, who you also were just on his show and maybe have talked with prior to that. What's your thought on QAnon with some of the political things going on right now?
Yeah. So when Q first started making drops, I was really into it. And I told G Money, I have 3 stickers on my car. One is an InfoWars sticker. The other is an End the Fed sticker. And then the other is a Q. Perfect. Now, that doesn't mean I agree with everything that comes from the Q movement. But part of my red pilling process, which led to my orange pill, was that I found out that you need to question things, right? And for me, my first wake up moment wasn't really until 2013. That's when I was saved, in October 2013. But previous to that, I had started learning about all kind of New Age stuff. Like, you know, I went into college, started learning New Age spiritualism and spirit science. And then I saw this documentary called Zeitgeist, where they talk about Jesus and they compare Christianity to like the stars, and they talk about central banking and then 9/11. Well, funny enough, all 3 of those topics are very important, but what caught my attention was 9/11. And I was like, wait a second. Yeah. 2 airplanes can't make 3 buildings fall at free fall speed. That's just not science. That's not true. That can't happen. The 9/11 commission report cannot be correct because that can't happen. And that was like my kind of like, ooh, you get a feeling in the pit of your stomach. It's like when you've been betrayed by a good friend or something. Like, it's just a weird feeling because we grow up, and, you know, when I grew up in New Jersey, we said the Pledge of Allegiance every day in school. And we learned a lot about American history. And my dad is actually a big fan of American history. So I used to watch a whole bunch of different stuff and listen to him talk about it. But when movies like The Patriot came out and stuff, like that would be like a family, like once a month, he would watch that movie for sure. Like, just because he loves that time period. But all of that kind of was ingrained into me already. So when I started learning that the government would lie at that level, I started questioning everything. And to me, that's what Q stands for. Q stands for questioning everything. And that's really what real science is. Real science is that you question and then you test it, and then you re-hypothesize if your question led you to the wrong answer. So, you know, the world has fallen so far away from real science. It's fallen away from real money, from real finance. I mean, Griff, I see where you're coming from, because it's like, hey, let's just get this lady in there and get this over with.
No, seriously, we might as well just deal with it. I think I dropped this line the other day too, but it's like, you know, Walt Disney's head's frozen. You could see that being put on another body, stick Neuralink in it, and there could be a whole interview going on with him on Tucker Carlson. And most of the public would still not like know what's going on. They're like, oh, everything's fine. Like, we're all good. I guess we can do that, but I can't afford an egg at the grocery store. It doesn't make a whole lot of sense. But it's really interesting because I kind of feel like that's a lot of people's transition. It's political at first, and then it becomes about the money very quickly. If, in my opinion, you're truly independent, you probably find Bitcoin pretty quick. That's how I found it in college. It was like, all right, I'm listening to political podcasts. Okay, this is pretty dumb. Okay, I'm posting black squares. Now I'm like, I'm apologizing for basically my whole life, and I'm very confused. And then I'm like, that's not the solution. I'm like, the solution, because for me personally, it was like, I love a lot of my teammates, right? Like that's where the black square comes from. You feel something and you want to help, or like you want there to be a solution to all the problems in the world. And that's how I came to Bitcoin personally. But talk a little about that, because if you've realized the system's broken, fundamentally speaking, then something fundamentally, I would assume you think is economically wrong with the country. How quickly did that political to economic shift happen for you in like 2013?
Yeah. Well, when I went to school, I first started going to school, I wanted to be a nurse anesthetist because they made a lot of money. That was like my main motivation. And then after going through like the first 2 years of like your gen eds, it's like, what the hell does it matter what I wanted to do? We're all learning the same stuff. Like this is just all the same. This is all the same stuff. And we're paying so much money to learn what exactly. So it was like really weird feeling to be taught how to think, or I should say what to think instead of how to think for myself. So that kind of already gave me a weird feeling, and it really set me up to not excel in that kind of setting. So then afterwards, I'm like, well, you know, I don't want to do all that stuff. Like after I started getting to medical classes, it was like, I don't enjoy this. Like I don't enjoy studying the map of the body and all this other stuff, but it was pretty cool to learn some of that, but not for the price that I paid to learn that stuff. So then I was like, all right, my dad's a businessman. I always like business. I've always been interested in business. So when I finally switched what I was studying, I got all the traditional stuff shoved down my throat. So for me, it was like, whoa, I started waking up. And shortly after I woke up, I met this person named Jeff Berwick, who calls himself the Dollar Vigilante. He's pretty unhinged at this point. I can't. He's a very free-minded thinker, and it's always great to hear his opinion. I'm always thankful to him. The Lord used him to orange pill me and teach me about Bitcoin very early on, and Ethereum before it even came out. So those were two big life-changing things for me. And when I started learning from him about the economics of Bitcoin, I started, wait a second, this is not what I learned. So almost immediately, I became addicted to it because I had realized, whoa, it's kind of like when you question something, right? And then you realize, wait a second, that answer is not the right answer. Here's, it could have been a bomb. It could have been this. There's video evidence of the foundations being slanted at an angle, cut from the wire, how they do demolitions. Like you start to find all these solutions, and you get that positive feedback loop in your brain, and you want more and more and more. And that was Bitcoin for me. Just getting into leaving behind the Keynesian school of thought and modern monetary theory, and moving into the Austrian school of thought and starting to learn true free market economics. And the rest is history. People don't have to take as deep of a dive as I did, but to me, it's like every day I learned something. And I just saw, I forget who said it the other day. They said, you'll never be a Bitcoin expert. And I said, yeah, that guy actually really knows Bitcoin, because the deeper you get on Bitcoin, the more you realize nobody, I don't care how much you study, nobody can be a Bitcoin expert, because it's just truly, I don't really know anything else like it that fits into all of those different verticals and changes the way you think. It's amazing.
You know what's interesting? We had a guest on. We've had him on 2 times. It's Modern Apocrypha on Twitter. Go check him out if you don't know who he is already. He's got a really interesting thought process. One of the things that he shared with us is that basically everything is downline of our belief system. Downline of our belief system is culture. Downline of culture is politics, and politics kind of affirms or disaffirms what we believe to be true, right? And also kind of has part to do in society and culture and how we think about things. And what's interesting, I think, so much about Bitcoin is that, just like you're saying, it's a fundamental paradigm shift, right? It naturally does not fit into a box within the traditional financial system. In the process of that, you kind of have to reevaluate things from a base layer, as opposed to, oh, well, it's this kind of an asset, so this is the kind of rate of return that we're trying to look at. Or, it's all, I feel like a lot of traditional finance is all about rates of return, right? We kind of lose this connection or this differentiation between savings and investing. Before I go too far off, my thought there is more so on kind of this transitionary phase where people are having that paradigm shift. They're finding Bitcoin, they're digging into it a little bit and saying, oh, wow, something's different here. than what I thought. And maybe I love that meme, the meme template with Fry from Futurama where he squints his eyes. You know, the more you dig into Bitcoin, the more squinting my eyes become, because it's like, I don't know if I believe what you guys are talking about. And I think something that's interesting, and so I'm going to pose two questions. One is, what is your thought on that kind of transitionary phase where people are coming to realize that things are maybe different than what they thought? And the second part is about Bitcoin bonds. And I think that in that transitionary period between, let's say, fiat land and a Bitcoin standard, there is going to be some weird kind of hybrids that I think seem to make sense to some degree, depending on kind of what parameters we want to put on the conversation. But so first question, the transitionary period, and then second piece, Bitcoin bonds.
The transition is interesting because there's that famous saying that you don't change Bitcoin, Bitcoin changes you. And what's really interesting is when you first start that process of study, you know, you automatically think, okay, bigger blocks, duh. You know, like, wait, what are you guys doing? Like, this is simple, make the blocks bigger. But then you start to realize, well, wait a second. If we make the blocks bigger, we lose decentralization because now it's really expensive and technical to run a node. So you start to learn all of these different trade-offs. But I think that real transition happens once you become a user. And that's why we say, you know, we just have to get these politicians to start to participate. And that's where the number go up technology is. So we know how good the politicians are. They're the best traders in the world, right? I mean, they make the hedge funds look stupid. These boys are putting up big numbers. It's actually wild how good politicians are.
The secret ingredient, all it is crime and corruption. That's it.
It's sickening, actually. But Bitcoin is now wiggling its way in. Why? Because of the invisible hand that motivates markets and creates incentive, profit. That's why. And these Bitcoins are these Bitcoiners, future Bitcoiners, they don't know it yet because they think they're going to change Bitcoin, but Bitcoin actually changes them. And that's what's so interesting about your original statement of traditional finance is all about rates of return, isn't it? And what triggered in my head when you said that is that the whole system is flipped upside down. So I think what's going to initiate this mass adoption, what's going to initiate this mass awakening, you know, we need something. Look, if 9/11 didn't do it, and then COVID didn't do it, what's going to do it? What's going to be? I mean, we shut down the world and told people they can't go to work and you have to wear a mask and take medicine. If that didn't do it, then I think we know the word is true, right? Only Holy Spirit is going to reveal and give you ears to hear. But something has to happen. And I think what's really going to happen is in the traditional world, on the physical plane, not the spiritual, the function of interest rates is going to shift. And right now, the problem is, and it makes perfect sense if you think about it. It makes sense in a regular true free market for you to have no debt and for you to lend your money. Because the first thing is that when you have no debt, you have no interest liability. You don't have to add and produce extra value in order to pay back on your capital, right? So when you borrow money, you should be taking risk. Like if you guys borrow money to start your podcast, you have to get a return on that investment because you have to not just get the money that you borrowed, you have to get it back with earnings, with interest applied. So you need to get sponsors. You need to go out and take action and provide value so that the person that enabled you to provide value can get back principal plus interest. Everybody watching right now is probably like, yeah, that's common sense. Yeah, but that doesn't work that way. You know why? Because the government and the banks are the biggest borrowers in the world. That's why. When you deposit your money at a bank, the reason they pay you interest is because you're actually lending them your money. And when you buy U.S. treasuries, that's you lending your money to the U.S. government. So the biggest borrowers in the world by far, and I mean by substantially, I mean personal income credit hit an all-time high, just over $1 trillion. The United States government has $35 trillion in debt, $217 trillion in unfunded liabilities, and the banks currently have customer demand deposit liabilities of around $17 trillion. So when you combine those two things, we're talking well over $300 trillion of borrowing versus about just over $1 trillion of borrowing for we the people. So the biggest borrowers in the world are governments and banks. So of course they flip the script. And once people see this, hopefully this is that transition moment. I think when they see this, they're gonna be like, whoa, I've been lied to. I've been scammed, because real interest rates are actually negative. It makes more sense today to have debt, as long as it's a fixed rate debt, right? Like variable credit card rate debt. Yeah, pay it off, get rid of it, because it'll kill you. But a fixed rate debt, like a mortgage, I mean, people, you should see people, some of the boomers I talk to, their jaws drop to the floor when I tell them, yeah, I'd be happy to take a mortgage, even at 7-8%, and to buy a house that's a little bit overpriced. Yeah, I'd be happy to do that. And they go, well, why would you do that right now? Why wouldn't you wait for lower prices or wait for lower interest rates? I said, because the rate of inflation is 11%. So I don't care if I borrow 8%, I'm still earning in purchasing power terms. I am being paid in terms of purchasing power to borrow. And one day, if I borrow money and my monthly payment is $3,000, I believe sometime in the next 30 years, I will be able to go out to the street, pick $3,000 up off the ground, walk into the bank, and pay my mortgage for that month. So what does that mean? That means for the borrower, you have an asset, because that $2,500 is a fixed cost over time. Imagine the people right now. It's wild, really, because you have a lot of people who locked in, especially wealthy people who locked in interest rates below 3%, and they bought $1 million home, and their monthly payment is like $2,000. Well, if you want $1 million home today, you're talking about like $6,000, and it's like, whoa, wait a second, you have a beautiful home. It's only costing you. Imagine how happy those people are, only paying $2,000 fixed cost. $2,000 to pre-2020 versus $2,000 today is a huge difference. $2,000 today is like, this is great. I can't believe I'm only. You watch all your prices, all your costs go up, but what stayed the same? The price of your house through your mortgage. So you see that debt that a lot of people would say, because they've been taught the traditional practices of finance, where interest rates and returns are the whole cash flow is the name of the game, right? We're transitioning from cash flow to purchasing power. And that's what this is about. We got to flip the script so that it makes sense to lend money again. Because when you lend money, you should receive back increased purchasing power, not decreased purchasing power. Now, the banks and governments don't like that because they're the biggest borrowers. But we, the people who are the biggest lenders, Bitcoin offers us this opportunity. And I believe, like on the physical plane, that is going to be that orange pill moment for the vast majority of people who finally start to understand, wait a second, it's not about the cash flow. It's about how much I can buy upon maturation of the note. And we can leverage that reality right now with Bitcoin bonds by taking the best of both worlds to empower we, the people, to empower borrowers, and also to keep these lenders in check.
Yeah, I like so much of what he's saying. And to put it in Griff speak a little bit, I mean, it sounds generational from what both of you are describing, religious and generational, spiritual and generational. But there's obviously a lot of like fourth turning generational talks, especially when you get into Bitcoin. And, from my perspective, it's really just like these boomers can eat their gluten-free cheeseburgers and shut the fuck up. I mean, seriously, it's unbelievable that we're the generation that doesn't work hard and we don't like pay attention to what matters, and the young people are the problem and everything. And it's like, you guys don't understand. Nowadays, I mean, we're being run by people and we're getting our products from whomever can ship it to us the fastest. And the politicians in Washington like it express, and they typically like to order pizza. So we got all kinds of problems, you know what I mean? And I agree. I mean, like, it's all in the base layer money. How does Bitcoin alleviate some of those problems? But also some of the Bitcoin ethos, because I was listening to a lot of your stuff and I was talking about it on my own podcast. You can do fiat with Bitcoin, or you can do, Bitcoin with stable coins. You can do that with the bonds and everything. And I would love to hear a lot of your take on this, but is it guaranteed to make the economic situation of the world better by doing that? And how do you see that kind of playing out? Because Bitcoin does seem to be taking up more of a collateral standpoint, which for our generation could be great. Maybe the next generation is something different, but is that kind of the move that you see? And I guess the main question is it inevitable to you at this point?
Yeah, that's a great question, because the way I think about it is this: you're not going to get to medium of exchange until you get rid of capital gains, right? Because you can't micro spend your Bitcoin. Like, if I paid 5 cents for Bitcoin and now I'm buying a $7 coffee, I'm going to get hit with capital gains on $9.95, and I'm going to be liable for that. And then when I sell to do that, I'm going to be liable again. So as long as there's capital gains tax, we actually have a need for cash flow. right? Because the idea is we want to accumulate as much Bitcoin as we can. So this is where the understanding comes from. And I hope what happens is when we initiate this understanding, when this orange pill moment, red pill moment takes place of, wait a second, they rigged the system. I'm the lender. I'm supposed to be benefiting, not the borrower. What they realize is, number one, that when you have interest rates that are less than inflation, you have less purchasing power. So it doesn't matter the nominal number on the screen. And that I think is the biggest confusing part right here. A lot of the older folks that I talk to, who are very successful and smart people, by the way, these are not your average brainwashed mainstream media propaganda tuned in people. These people are awake, they're smart, they deliver value to the economy, they're producers, they're well off, and they've accrued wealth over their lifetime by the value that they deliver into the economy. Now they're starting to understand, well, wait a second, 5% on treasuries isn't that good when inflation is 11%, because I can buy 6% less stuff at the end of the year. So I need a way to protect this purchasing power value. However, when you talk about cash flow, that's what creates a lot of interest to these people, because a lot of people's wealth, Bitcoiners are the most liquid wealth in the world. So people like Max Kaiser and real OGs who have big stacks, they're actually more wealthy than the Elon Musks and the other people of the world, because they could get the liquid value of their Bitcoin in a very short amount of time. Whereas Elon Musk would have to sell off shares, assets, property. I mean, his portfolio is huge, right? He's one of the richest people in the world. But to liquidate that portfolio would take a lot of time and effort, and there's probably going to be quite a bit of slippage as well. But with Bitcoin, it's the most liquid market in the world. So that's one of the first incentives to how this can work together. The second thing, though, is, and you make such a great point about this, it gets confusing. How can we have Bitcoin? How can we have dollars? Aren't they against each other? How can they work together? And this goes back to education. There's a difference between money versus currency. Money is not currency, and currency is not money. People really need to understand that. And when you look at gold was money. We learned a lot of the characteristics of money through gold. Gold has been a blessing to humanity, in my opinion, to teach us these things. But Bitcoin comes in as the engineered money. It comes in and makes gold better with technological upgrades, doing what gold could never do as a natural commodity. But what happens through that process is that people start to figure out, oh boy, if I sell, I'm getting hit with 20%. If I use my cash flow, this is earned interest, or this is taxed as income. So you can, and with different write-offs and tax incentives, all this stuff comes together. You say, okay, we got a big problem here. Well, interestingly, gold had the same problem. Gold went through this at one point, and gold needed a layer 2 solution. Isn't it funny that Bitcoin actually needs a layer 2 solution, and gold needed the same thing? And for gold, it came in the form of paper debt notes or checks and bank deposits that you write against it. Once it achieved that point and it became a medium of exchange because it was easy, the velocity of money, or the pace at which money could change hands, increased substantially. And what that did is that allowed for rapid economic growth and expansion. So when gold was upgraded from a store of value to a medium of exchange, it very quickly became the universal of account. We're only in year 15 for Bitcoin. Bitcoin is like store of value, and we're already in year 15. That in itself is a miracle. And now we're going to have these L2 solutions, which are going to help increase monetary velocity of Bitcoin, where it makes sense to do that micro payment. But we still have the capital gain structure. So we still have that blocker there. So while we're waiting for politicians to have their orange pill moment, and for eventually our generation to move into those positions of decision-making power, and capital gains is removed from Bitcoin, until that time comes, we need to understand how we can use money with currency to benefit ourselves, and even to empower the State of the Union, even though it should be a smaller government, right? We still want laws. The Constitution, it exists nowhere else in the world. Nowhere else in the world is there a legal document that says that we have God-given rights. That's why these people hate it so much, because it actually declares God to be real and then says he gives you your rights, not government. And these are your rights that are protected. So, of course, the world hates it because they hate the Lord. And don't be surprised when they hate you, because they hated me first. So everything we see here is validated. But then we ask ourselves, okay, I get it. We're fighting the system. we want to break free, but we also want to be lawful. This is a peaceful revolution. What can we do? Well, we can use the currency to our benefit. And gold really exemplified how that can happen. The problem with gold was that it was too expensive to settle and secure, right? If you have to send it across the world, you have to secure it, you have to transport it. Sometimes you would pay more to settle than you would in actual interest costs to borrow against it. So what happened was we moved into treasuries, right? And these government treasuries came in, and the cash flow created from the tax income, which is why the Federal Reserve Bank was so adamant about the income tax, because you needed some sort of continuous, perpetual motion machine, right? You collect taxes perpetually, and it allows you to create a liability off of that continuing cash flow. Well, currency, Bitcoin is now that. Bitcoin is now that. It increases your purchasing power, and you use currency to borrow against your Bitcoin, because the currency is not money. Currency is a medium of exchange. So the dollar, especially in the form of stable coins, in tandem with Bitcoin as the base layer money, as the most pristine form of collateral in the world, it actually enables you during this transitionary period. Because number one, when you borrow dollars against your Bitcoin, there's no tax obligation. So that solves the capital gains problem right there. Now, what you do with that money is different, right? Because if you spend that money, you're spending it with interest, and you have to earn it back without interest. So that it doesn't really make sense. But if you're borrowing against your Bitcoin in order to invest in a business and to invest in anything that will have any type of return on investment or cash flow, well, then it becomes really interesting. Because if you can borrow against your Bitcoin at a rate that's lower than the investment is producing cash flow, you're going to have profit, and profit creates incentive. So we can still get the benefits of Bitcoin at large in society when we combine it with the US dollar. Now, here's a really interesting point I want to dive into for your listeners, because nobody is talking about this. Nobody. A couple months ago, I spoke at the Bitcoin Energy Summit with Byron Donalds, who almost was Trump's VP. And I think actually Trump is saving him for a bigger, better position, perhaps even speaker. So what he said, and he's on the Financial Services Committee, right? So this is the highest level in the United States talking about financial issues in the country. He talks about lack of demand on U.S. treasuries. So we say, hey, CJ, what's going to take down the bankers? What's going to fix this problem quick? You say, oh, yeah, well, it's got to be Bitcoin, right? I always thought it was going to be Bitcoin that would take down the fractional reserve banking model. But more recently, I really believe that stable coins are actually more of a threat to the fractional reserve business model. Now, notice how I said fractional reserve. I didn't say banks. I don't think stable coins are a threat to banks. I think they're a threat to the fractional reserve business model that banks currently employ. So when you talk about Trump, and he came out and, he said a lot of great stuff. It's a shame that RFK got to speak before him and say all those what would be considered radical things for Trump to say. But if you took away what RFK said and then you listen to what Trump said, you'd be like, oh, this is amazing. It couldn't have gone any better. Not only do we have a Bitcoin strategic stockpile, not only is he not going to sell the Bitcoin, not only is he going to work with people like Loomis who can put in a bill through Congress so we can stack more, but not only is he going to tap into the oil and make us one of the lowest energy cost producers in the world and a Bitcoin mining powerhouse. I mean, you have all these fireworks going off, and then he comes out and says, I will expand the dominance of the dollar with stablecoins. And I was like, whoa. That is interesting, because out of everything he said, that could have been the shot he fired back at the powers that be who took their shot at him a few weeks previous, because never before has the fractional reserve business model. And let me tap into that real quick. When you put your money to the bank, we told you already, you're lending to them, right? So we understand that they have our money, we're lending. Okay. They're going to take my money and they're going to buy US treasuries. That's going to act as the asset to balance my liability, which is my deposit. They're going to collect 5% from the government and they're going to pay me 0.1%. Okay, I get it. Custodial arbitrage. No problem. But I get to swipe my card and go to the ATM and pay 4% to access my money. No problem. I'll take these trade-offs. Crazy trade-offs that I would never take, and nobody should, but everybody's doing it. Well, here's the big issue. We already saw what happened when they raised the interest rates, and people left for the bank deposits to the money market funds in order to get the interest. That created the Fed to take radical action in creating inflation through the Bank Term Funding Program to make up the difference between the mark-to-market value and the par value of the collateral that the banks held, or else the entire banking system would have collapsed.
Would you go back through that last section again and tell it to me like I don't know anything?
Yeah, sure, no problem. So we take our money to the bank and we lend it to them, right? What they do with it in the background is they don't just put it in the vault and protect it. They actually go and buy U.S. Treasuries, and they use the reason that they do that is because cash is non-productive, a lot like gold. Gold is non-productive. At that point, there is no counterparty risk, so there is no yield. But when they lend the money to the government, you have counterparty risk. And the idea is with the government, you have the smallest amount of counterparty risk because they have the printer, right? They're not like a business who can fail and not pay you back. They literally will just print the money and give it to you. So that creates the inflation risk, because if they print the money and pay it back to you, you know you're going to get your money back, but you don't know what you're going to be able to buy. That ties into the purchasing power concept that I think is being revealed. But then what happens is when they raise the interest rates, the mark-to-market value, in other words, the value of the note or the bond that they bought in today's terms, if they needed to liquidate that, right? We just talked about how if Elon Musk tried to liquidate his wealth. Well, when you buy a note or a bond, you get principal plus interest upon maturation of the note or bond, which means you have to wait until the note matures. So if the banks were forced out the yield curve, they could not buy 1 year treasuries. They could not buy treasury bills. Because the treasury bill rate was 0 to 0.25. So they wouldn't make enough money to custody your money. So they went out the risk curve. They took higher risk in notes and bonds. But now when the Fed raised interest rates and interest rates went up, well, when the interest rate goes up, yes, the price of the note and the bond goes down. So you can imagine now this depositor who gave us $1 million, he doesn't want his money in our bank anymore. He wants to move his money from our bank to the money market fund. Well, the bank cannot just send the money market fund the liability, right? The liability they just typed in on their computer. Your money is really not there. It's just in their system.
Quick note there. So part of what you're getting at then is that this end consumer, let's say it's just a normal guy like me, takes my money to the bank, I deposit there. Well, in my perspective, my money's at the bank. But from the bank's perspective, they have gone and done this treasury strategy so that whenever I, as the actual lender there, the depositor, I want to move my money thinking that I've just got liquid cash at the bank. Well, now they're forced to liquidate in that sense.
Yeah. So the first main benefit is going back to these fractional reserves and just kind of completing the idea of, okay, the bank needed to sell that treasury at a loss. Well, where does the extra money come from to transfer to the money market fund with my liability? They had to print it. Exactly. Hardcore burr. Even when they're doing quantitative tightening, even when they're supposed to be shrinking money supply, they're still burring. They're still printing. And what that does is it creates a big risk for people. And stable coins come in. This is where Byron ties into this. Stable coins are backed 1-to-1. So your bank deposits are backed, best case scenario, by 10 cents. Worst case scenario, closer to a penny. And it just depends on the bank and their risk profile and their interpretation of Basel banking. But it's going to switch between each bank. But it's between a penny and 10 cents. The stablecoin bill that the Financial Services Committee had eyes on requires that a stablecoin be backed by cash or cash equivalents. Well, one of the biggest benefits is going to be from the fact that when you go into a bank, it doesn't have to be fully backed. But when you go into a stablecoin, it does have to be fully backed. So what it does is it creates demand on treasuries, and that supports the government spending. That doesn't necessarily stop inflation. That can make inflation worse. But if people understood that Bitcoin was the base layer money, you don't care how much they print. Like all three of us, we don't, like you said at the beginning of the show, bring it on, baby. Print it as fast as you can. The more you print it, the more rich I get. The more you print it, the more stuff I can buy. Print all day because I don't care, because I'm protected. Well, everybody can get this protection, and they should get it from owning Bitcoin. But for some of the people that we talk to in the industry, there are some entities like old money. I'll just say old money, right? It's been around for multiple generations. It's been managed through multiple generations of people, and they like to lend their money. They don't like to invest. And that, there's a big difference between lending and investing. You invest to take risk and you lend to mitigate risk. And I always say, Bitcoin should be 100% of your allocation. People are like, how much Bitcoin should I buy? And like, let me stop you right there, because you're talking about investing and you're already talking about it wrong. The whole point of Bitcoin is that it's savings technology, and your savings should start at 100%. And then your wants and your needs and your investments will take down from that 100%. But see, in the traditional system, we don't have that. We don't have a way to increase our purchasing power through savings. So we're forced to spend or invest. And that's where a lot of this, the backwards incentive model comes in. And Bitcoin can flip that script, because that incentive model does not empower us. It forces us to take risk. A Bitcoin-backed bond actually incentivizes you to save and incentivizes you to make smart investment decisions. Just look at the stock market today. How many zombie companies are there? Why are there zombie companies? Why are there companies that are not making enough money in order to pay off their debt? Well, because you know why? The products and services that they offer to the market are horrible. And the free market pricing signal is trying to tell them that. It's your cost of production with all your employees, right? Your land, your labor, your material, your entire operation of providing this good or service to the world is actually costing you more than you can create in income. And that is how the free market signal says, stop what you're doing. You're wasting your time. You're wasting your energy. You're wasting these resources. All of your employees should be fired. Your business should go to nothing. And then all of those people should find new jobs in a productive company that offers a product to the marketplace that allows, the people of the marketplace will pay a price above the cost, because that's how they signal to you that we approve your product. We approve what's going on here. That free market price signal will actually have its voice again. And you won't see zombie companies. You won't see all of, one thing you mentioned earlier, which actually a very astute observation. We're buying stuff for the cheapest price, right? Who can make it the cheapest? It's not about quality. It's not about long lasting. It's about cheap and fast. Who can give it to me the cheapest, and who can ship it to me the fastest? And then what happens is your quality of life and standard of living, because the things that you interact with, quality and standards, are dropping, also drop. So all of that gets flipped upside down with Bitcoin, because it creates the proper incentives. So I think that it's not really necessarily monetary benefit, right? It's not like, oh, you're going to get extremely fabulously wealthy and rich. It's those second and third order effects I was talking about earlier that nobody can fully wrap their brain around or write it down and define it and say, this is exactly what's going to happen, and this is exactly how it's going to take place. We don't know all of those second and third order effects. We know the base layer effects. And one of those base layer effects is that the quality of life and standard of living will go up substantially, because it'll make more sense to save your money. And by the way, I'm not sure, I hear this all the time. Why won't people spend Bitcoin? If the price just keeps going up. But for me, I've been in Bitcoin over a decade. Well, every single day, I'm more incentivized to spend, because I keep having more and more purchasing power. I started out with not even being able to retire. Now I can retire my family for generations. It has become much easier for me to spend Bitcoin, not harder. So the more value that accrues into Bitcoin, the more spending we're going to see, because people want to live life and they want to, I'm going to use the wrong word here, but they want to live life and live abundantly, right? You want to enjoy the fruits of your labor, and you can still be responsible, and then you can still spend. It's not like you can't spend. It's not you were talking about a meme earlier. I love the meme where you see the crypto Bitcoin bros, and all they have is like a table, a computer, a coffee cup, and like a blow up mattress. And they're like, I'm ready for the bull market, baby. Yes. And I don't blame them, because they're trying to get ahead. They are doing the right thing. They're doing 100% in Bitcoin and let Bitcoin do the hard work. But after you make those right decisions, and after you make those sacrifices, after you've been through a couple halving cycles, you're going to realize, whoa, I can buy a house and it's not going to cost me that much Bitcoin. Like, relative to my Bitcoin stack, this is great. I can buy a car. I could do this. I could do that. And it becomes easier to spend over time. But then you start spending on better things, higher quality products. You start investing in better companies that have profits, right? And then that natural free market price signal and the natural free market business cycle too. Remember, when Bitcoin, FTX was printing paper Bitcoin, but when the hammer came down, there was nothing they could do. They failed. They're gone now. But how many companies should have failed during COVID? How many companies should have not gotten free money and been destroyed? And yes, there would have been a lot of jobs lost, but new companies would come up that solve new problems and deliver new value. And that's the problem with this system. We're not smart enough. We're not inventive enough. We don't have enough. We're created in the image of God, who is the creator. We are creators. The system is suppressing us. The system is telling us we are not smart enough to do these things. We need to do it for you. You are not smart enough to understand how this works. We need to name the price of interest rates. You are not. And that is what Bitcoin does. It frees you from that system that tries to tell you how to do things. And it just lets the market, through its free market policies, dictate what is right and what is wrong.
Yeah, it's really interesting because you talk about second and third order consequences. And it's just like, I'm not going to speak for all Bitcoiners, but like, let's just throw a few assumptions out there about the difference between what's going on now and what could potentially be the future. There's a market for war. There's a market for nefarious activity. There's a market for advertisement. There's a market for child sex trafficking. There's a market for everything right now. And based on the money you use, what type of money you use, what we've seen from a historical perspective is the type of money you use supports different markets differently. And the hope with Bitcoin is that the nefarious, the war, all these things, the incentives are more correct from a money standpoint, not maybe even a currency standpoint, but from a money standpoint. Even if you use it from a treasury standpoint, like we saw with FTX, some people are saying like, BlackRock, where's the Bitcoin? Like, we want to know like exactly how much you buy. Like, this whole system we have right now is not good. It's not transparent enough. And Bitcoin, whether they want to be transparent or not, well, you're probably going to get some truth out of that, I assume. And that's kind of some of the ethos of it. At least that's what I would think. I don't know what you dream up in your second or third order consequences of Bitcoin, but I like to think utopia instead of dystopia. Like I like to at least think that. I mean, I know there's some dystopian takes, like we were talking about earlier. There's a dark side, there's a light side with one of our guests, and either side, it ain't great. Some of that's spiritual too. Do you think, I was asking Nick this earlier, and you know what, it keeps coming up on the podcast, so you might as well ask it. Is Bitcoin, because Max Kaiser's take, Bitcoin's God, okay? Like that's out there. I mean, like, I'm not signing on to that take, but I am co-signing a lot of what you've just said over like the last 45 minutes. Like, a lot of it is just straight knowledge. Like, if anybody's paying attention to this point, you're literally just getting a lot of a lot of things at once. And they are, logically speaking, in my opinion, from all sources, extremely correct. But there's another side to Bitcoin where it's just like, okay, like, who's this Satoshi guy? Like, who created it? Like, what order of consequence, I guess, do you think Bitcoin interplays with religion?
Yeah, I love Max, and he's one of my favorite in the entire space. He is fantastic, but his take on Bitcoin as God is, first of all, it's blasphemy, and it's not right. Jesus Christ is Lord, King of Kings and Lord of Lords, and that's the end of it. Just like the Bible, we have the Word of God. Thousands of years later, after the world hated it, it's still here, proving that God can preserve his word for us. But how was it written? It was written through men who were inspired by the Holy Spirit. Well, I believe Bitcoin was coded by men who were inspired through the Holy Spirit. Who do you know who is an earthly person that would walk away like Satoshi did? That you have to be a Holy Spirit filled person to do that. Even just to have the wisdom to do that, right? Like, knowing that it could be something in the long run, you would keep those coins. He would be the richest person in the world right now, right? So what earthly person, what worldly person would do that? I don't think there is one. So to me, Satoshi is a group of people who were inspired by the Holy Spirit, who also, by the way, include the people, whether they knew it or not, who 40 and 50 years earlier were helping to build the protocols that ultimately led to Bitcoin being built up. So a lot of people say, oh, Bitcoin just came out of nowhere. Late 2008, we got the white paper, and then 2009, boom, and then, oh, it's new, it's dangerous. No, this was an economic and financial idea going back 50 years before that, where multiple economists and financial professionals and monetary theorists and from all spectrums of life looked at the problem, said, hey, and it's summed up in that one quote so well, where he goes, we'll never have control of the money except through some sly roundabout way. We take it back from the government. So this is a culmination of 50 years of work of humans working together and building on top of each other's shoulders to gain freedom from this oppressive system. And in that way, I do believe that Bitcoin was created together with humanity through those generations, through those 50 years, building on top of each other's shoulders, given wisdom through the Holy Spirit, understanding and discernment, now giving us a tool to go and free ourselves from the system. So I view Bitcoin as a gift from God, but I completely and strongly disagree with what Max Kaiser said, that Bitcoin is God. But it's funny because I call Bitcoin truth money, and Jesus is the way, the truth, and the life. So everybody who goes towards truth, that's why there's a lot of Christian Bitcoiners, because that resonates with us. Hey, this is truth about finances. This is truth about money. This is a system that cannot be defrauded because it is truth and truth only. And that's how God is. A lot of people get mad, like, how would God send people to hell? Because sin is sin, and you have to draw the line. And if you cross that line, the wages of sin is death. So he would be an unjust and an unloving God if he accepted sinners as well. It's either truth or a lie. You can't have your cake and eat it too. And fiat is a lie, and Bitcoin is truth. And that's where we see the characteristics of God shine through our own human creation, us being built in the image of God, wanting to excel and promote truth, which is God. So that's where that's how I look at Bitcoin. And I think that's so important when you relate it to the money markets and you relate it to Bitcoin bonds, because we brought that up a couple of times and I didn't hop into it because I wanted to lay down that base layer. So here's one instance where Bitcoin bonds can help us as we the people, right? Because that's really what we're trying to do here. Number one, I think Trump said it really well: drain the swamp, right? We're trying to get this corrupt system out of the hands of people who have used it against us. And then we're trying to get laws passed that will protect us. And that's why we call this a revolution, a peaceful revolution, because a revolution is where you're going against the powers that be, but you want to do it at first, in a peaceful way. Imagine all the patriots. How many times did they ask the king? They asked the king so many times. They wrote letters. They waited. They were patient. They were conservative. They did everything they could do. And finally, the British marched on them in Lexington and Concord, and 500 British soldiers died in that. And they said, look, this is the resolve of these people.
They even lay that out in the Declaration of Independence. They're like, we did this, that, yep, this, that. Can you imagine getting CC'd on an email and they're like, CJK did this, that, and that's why it happened. That's why this happened.
Well, that is a lot of what's happening right now in the realm of finance. I think we are fighting a revolutionary war in the realm of finance, and it's not really USA versus China versus Russia versus India. It's really central banking versus we the people. And that's what Bitcoin does. So Bitcoin is kind of like this Trojan horse, just like stable coins are a Trojan horse with their one-to-one backing, that one-to-one reserve status. A more secure, fully backed currency liability is better than a 0.1 to 1 backed banking deposit liability. The stable coin is a Trojan horse to the fractional reserve model. Well, Bitcoin bonds is the Trojan horse to the realm of finance and that realm of cash flow that you had mentioned earlier. And how it can be applied, to me, is what's so interesting, because really what it is a principal protected note. But when you say principal protected note, people are like, who cares? And they start to fall asleep on you. So we call it a Bitcoin bond because it just kind of helps describe the product a little bit more. Also because the yield itself is paid by the performance of Bitcoin. And that's really interesting because, Griff, we mentioned it before, real interest rates, or other words, your return in terms of purchasing power is actually negative. But that can't happen with a Bitcoin bond because, number one, the principal protection part. So what's really interesting is that depending upon the issuer, you're going to change the risk within that principal protection. So in one case scenario, you could have the United States government issue a Bitcoin bond. And I think one of the reasons they would do that is if Trump got in there and now maybe the country, well, now we have our stockpile of Bitcoin, right? How can we use it to benefit us as a union? And now we might be even mining Bitcoin, but also Trump could collect tariffs in Bitcoin. And then when you get all this Bitcoin, you package it together into this bond product and you sell it back into whatever program you're trying to save. So wouldn't it be amazing to put an end to Social Security? And you say, well, CJ, that sounds dangerous. That sounds radical. What do you mean? Okay, well, what if we stopped collecting the Social Security tax, or we picked a day, we picked some day in the future where that stopped, because what we're trying to do is we're trying to recapitalize the program and then pay out to who we're obligated to pay out, but then free people to make their own investment decisions after that's handled. One way that we could do that is we collect tariffs in Bitcoin. We package those tariffs into a Bitcoin bond. We sell the bond as a government, as a U.S. government. We sell that bond back to the Social Security Fund, because the Social Security Fund is a separate entity. It's not part of the U.S. Treasury's balance sheet. It's its own entity with its own balance sheet. And most of its assets are government notes and bonds. The effective interest rate of the Social Security funds was 2.4% last year, 2.4%. And even inflation right now is higher than that. So that's why they have to keep raising the full retirement age. And yes, your cost of living adjustment will go up according to CPI, but CPI is lower than the real rate. So that's why the quality of life and standard of living provided for by Social Security continues to drop.
Not to interrupt, because I mean, I'm serious about the whole co-signing thing. You're awesome. I cannot wait to add you to my Rolodex of podcasts. This is so great. What an introduction. So are you kind of saying the whole rate cut thing this year is bullshit, or is that going to just usher in like another inflationary time that's just like, all right, guys, like you guys need to be taken away from the money printer like yesterday. Like what the hell? Like anybody with a brain can see that rates do not need to come down yet. Yet during an election year, when it's friendly to a certain political side, they tend to do some things that are a little bit economically, I don't want to say corrupt, so let's just say stupid. Let's just say dumb. Like they do dumb stuff. Are you kind of saying like, do you think they're going to cut rates, or do you think that they're going to maintain them with where they're at, given the current situation?
So that goes back to what you were saying about GDP. Because what's really happening is they do need to cut rates. The argument right now is that they do not need to cut rates because we have a strong economy. But the reason that we have a strong economy, and your listeners can go to govflation.com to track these real numbers with us. We do that over there. The problem is that when you look at nominal GDP, you have to deflate that to get real GDP. So what the goal of deflating GDP is to take away the inflationary price increases. Yeah, so there you can see the official government. So see, according to the government, CPI is 2.9. So if you lend them money, you're getting a real return of 2.42%. You should lend us money because the rate of interest at 5% is higher than the CPI. So you're getting a positive rate of return. And by the way, when you deduct that from GDP is positive. But if you go down and you look at the Govflation headlines, which just go back to the 1982 government equation for CPI. So it's not a proprietary equation like Trueflation. It's just going back to the previous pre-substitution based CPI. CPI is almost 11%. So when you take 11% and subtract it from 5%, real rates are negative. And that's what we were talking about before. You have the government is in red because they're understating it, right? But the real rate is in green. It's flip-flopped on GDP. And GDP, you can go back up to the boxes. I think it would be easier to understand when you compare the two boxes. See, Govflation GDP is negative. Government GDP is positive. Why? Well, because they are subtracting a lower inflation rate, because that's the goal. The goal of getting from nominal GDP to real GDP is removing the price increases. When you remove inflationary price increases, now you have real economic growth. That's why they call it real GDP, because we want to see the real economic growth when you take away price increases. So when they say price increases are 3%, but they're really 11%, well, then when you reduce nominal GDP to real GDP by too small of an inflation rate, GDP is positive. So the economy is strong, right? That's what you're hearing a lot right now. The economy is strong. Everything is good. They don't need to lower rates. You can see there actually in the second quarter of 2022, which should be no surprise to anybody, because when they started raising rates in March, the goal of raising rates was to create demand destruction, right? Because they said that inflation is coming from the economy. Therefore, we must punish the economy. We must raise rates on the economy. We must destroy demand from the economy if we want to get these prices down. So what did they do? They fought the economy instead of the currency, and they crushed the economy, and GDP went negative. We've had negative GDP for 9 consecutive quarters. Your listeners should know that the textbooks say 2 consecutive quarters of negative GDP is a recession. But most people don't know what a depression is. A depression is 3 years or 12 consecutive quarters of negative GDP. Well, we've been we've had negative GDP now for 9 consecutive quarters. We are only 3 more quarters away of negative GDP from being in a textbook depression. That's how successful the interest rate hiking cycle was. Matter of fact, it was so successful, it would have brought down the entire banking system if they didn't have the Bank Term Funding Program. It was a very successful interest rate hiking campaign. They brought them even higher than I thought they could get them to. But they've destroyed the economy. That's the price we paid.
One thought on that inflation chart there is, because we know that you tell me, they've changed that CPI metric multiple times, not just since 1980 to now, right? It's interesting in that chart, they get further and further and further apart, which is telling us a lot. I mean, it's what we're having an entire conversation about here. We're told that this is what reality is, yet we feel something completely different. And that's why we're sitting here having this conversation now.
Yeah, and just to throw it in, I mean, so Jerome Powell's looking at the same shit. I mean, like, he knows. He's not probably as dumb as everybody thinks. He understands. So like I understand now after you're explaining it, okay, need to lower interest rates because the economy is bad. Inflation is looming. I mean, it's like, they did a good job. There is somewhat some truth, I guess, to like what do they try to call it? Like a slow death or whatever. Soft landing, slow death. I don't know. Whatever you want to pick. I'm going to choose slow death for this conversation. They're kind of like we're so far down the line, right? That it's like we do need an alternative solution because even though they did a good job, I mean, probably needed to raise rates even higher in order to get the kind of depression, or they needed to let the banks fail, which we just don't do anymore, in order to create the kind of recession that would actually at least give the middle class a chance to buy back into this country. I mean, like, we don't have a chance right now unless you're buying Bitcoin. So that's not financial advice again, but I'd probably save in Bitcoin. It's the only chance that you have to actually buy back into this country, because in the scenario you just laid out, okay, let's lower rates. What's that real inflation number going to get back up to, you think?
The U.S. Treasury has lost the ability to raise interest rates and create demand from smart lenders, because it doesn't matter which way they go. Griff, if they raise the interest rates higher, you said they should have raised the rates higher. No, because the higher they raise the rate, I'll tell you why. All of us listened. When they raised the interest rates, we slowed down our borrowing. We slowed down our spending. The government did not. Government deficits continue to increase. The national interest expense for government debt has gone from not even being a top 20 expense to now being the number 2 expense in the entire U.S. budget. It's larger than military. It's larger than medical. Only Social Security is a larger cost than our interest. So the higher that interest rate goes, the more inflation there's going to be, because the larger the deficit is going to become.
True.
And then if they lower the interest rates, what's amazing is and this is where it comes back to this word salad. They get to change the definitions of everything. It really, man, it really pisses me off that they get to do that and get away with it, because, inflation is a monetary phenomenon. So when they lower interest rates, inflation is not going to kick back up, because you know what's going to happen? The net interest expense is going to drop. But what's going to happen is we're going to have economic demand, because all of the people that sold their assets and moved their bank deposits into money market funds and into U.S. treasuries to get the yield, they're no longer going to be incentivized to keep their money there. They're going to sell. And this is what Warren Buffett is doing. A lot of people are confused. Why is Warren Buffett buying treasuries right now, like with a negative carry? That doesn't make any sense, because he's not investing in treasuries. He's trading them. It's common sense. It's 100% chance that they lower interest rates. So when they do, it's the opposite of what happened to the banks. The banks bought at low interest rates. They went up, price went down. They're buying at high interest rates. They're going to get artificially lowered. That's going to create a capital gain. He doesn't have to hold those for 20 and 30 years. He's going to sell them as soon as he gets his capital gain, and then take the profit and reinvest it back into the stock market. So we're going to see economic demand pushing up price. Now, that's I do want to lay this out for your listeners so that the light bulb goes off between the definition of supply and demand and inflation. Because when you have demand from the economy, that pushes up market prices. Now, the government will tell you that's inflation, but that is not inflation. Inflation is from the devaluation of the currency, from creating more currency units that lower the purchasing power of all other existing units. But what's interesting is economic demand passes through on price. Inflation passes through on cost and price. So when you have inflation, the producer's cost of production is going up. And that forces the producer to pass that cost onto the consumer, which forces the market price up. There's no increase in profitability. Matter of fact, sometimes they don't even pass that cost on, and they take a lot of those companies listen to it's transitory. So they didn't raise their prices, because when you raise prices, you push demand away. Higher prices means lower demand. So they didn't want to lose customers. So they kept prices the same, thinking that it was transitory when it wasn't, and their margins got crushed. So you have to push that cost through the margin. But when you have economic demand, it might push up the cost a little bit, but it's not a one-to-one. Inflation pushes up cost to price one-to-one, or else your profit margin shrinks. Economic demand pushes up the market price, but your cost doesn't change. So your profitability increases. And that's a really important thing for people to understand. So it doesn't matter if they lower rates or if they raise rates, whether we get economic demand or more monetary, or I should say currency inflation, no matter which way this goes, prices are going up. And that's why it's so important for people to realize it.
That's a really good, yeah. Wow. That kind of totally spun my take on it. And it was really good, because it's like, yeah, what's done is done. I mean, from that standpoint, absolutely. I mean, that's why every Bitcoiner gets into it. From a supply standpoint, what's done is done. The money's printed. It's already in this fractional reserve, whatever. I don't even know what you want to call it. So like things that infect inflation versus like what's actually going on in the market. Wow, what a great take. I don't even know what question I would ask now, Nick, because that was really good.
Okay, so going back to something that we were talking about earlier, I had like a million thoughts that ran through my mind. I'm going to see if I can catch a couple of them. Part of what we were talking about initially, and we've hit on it several parts: saving versus investing, borrowing versus lending, price increases via supply and demand stimulus as opposed to inflation, but ultimately time preference, right? In Bitcoin, we talk a lot about time preference, and how having something solid in terms of monetary properties, the ability to use that tool to save, there's a change in our psychology there, right? Just like you were saying earlier, right? We're kind of in a place now, to give you a little context, CJ, I'm 27, Griff's 27. We're young in our careers. We both are recently married. We're kind of like in this season of life where like, we're kind of setting the foundation, if you will, right? And I was thinking about this the other day. I wrote about it on Twitter. It's crazy to me that in order to have a home and to have a vehicle, well, I didn't start out this whole life game with like a big lump sum of money. I got to go like make money, and I got to save it myself if I want to, buy something, right? Or you could borrow it, or you could borrow that money, right? And again, to your point, right, this is part of that programming. This is a part of the narrative that has been spun to trip us up in what is not actually real. Something that it makes me think of here in thinking about the psychology of how we're thinking about these things is the time preference is absolutely shifted when we're looking at things that are distorted from reality. We just talked about the CPI metric, right? People look at CPI and they say, oh, that's what inflation is. Well, not really. We know, right? We just talked about a little bit in depth about how they've changed that metric, which I was listening to a podcast you did the other day. And I think you were talking specifically about how it goes from how the CPI metric went from a non-substitutive kind of index to a substitutive kind of index where, it's not just apples to apples. We can kind of substitute different goods and things like that. That's a whole rabbit trail to jump into. Okay. Then another thing that we were kind of talking about was being a net positive producer, right? If we're consuming 5 units of energy to produce 1 unit of consumable energy, well, then we're net negative there. We just recently had Joel with Untapped Growth on the show, and we had a whole conversation about his most recent article. It's titled Soil and Money. Really interesting take on Bitcoin from a an agricultural standpoint, right? And he talks about the first one is language, so that we can communicate what we value, right? The second piece is fire, which was the harnessing and the controlling of energy, so that we can direct that energy toward the things that we deem necessary to in producing the things that we want to consume and all that, right? And then the third piece is money, which was the synthesis between language and fire, in that we have to be able to communicate economically who we deem is most efficient and effective at consuming energy and producing what we want. And so then we continued talking on that talking point about how there's a shift in mindset or a paradigm where instead of going from an extraction perspective, we're thinking from a productive perspective. And then Jack Mallers has said it several times on his podcast recently, talking about how one of their businesses is their Bitcoin reserve, right? One of their businesses is their Bitcoin reserve. They stockpile Bitcoin. That's their treasury, right? And he talks about how he uses that as their opportunity cost metric. And he talked about how, if you go back over the last 10 years, you average out Bitcoin's returns, it averages 63%. If you go all the way back from the beginning, some of those early years, they really kind of skew the numbers. It's actually a lot larger. But if you just go back the last 10 years, the average increase in Bitcoin relative to the dollar, I would assume he's talking about, is 63% year over year. So he's asking himself the question, okay, we're thinking about creating this new product, or we're thinking about we need to add these people to the team. Is that going to produce more than 63% year over year? And if it's not, then why are we doing it? Because if we are, then are we going to have to do all this extra work? Because if we didn't, and we just kept our reserve here, we can go sit on the beach and drink pina coladas and swim in the water and earn 63%, right? So then he talks about how does that change the mindset, the worldview, or the approach that we're taking with things when we're able to lengthen out our time preference. And dare I make a comparison here or parallel to our faith in Christ, right? We know that whenever we live in this world and we focus on living of this world, that's a very short time frame, right? How significant is our, call it 80-year life relative to a timescale of infinity? It's like zero, right? And so I think in some sense, right, we're talking about this shift in mindset of the time horizon that we're looking at. And I think Christianity definitely does that, right? Whenever we study, we get into this and we accept the grace that's been freely given to us, man, that really starts to shift our mindset. Instead of thinking about, today, tomorrow, next week in my life, or even if I wanted to say my generational wealth, generational impact, that's still of this world, right? I think whenever we dig into what Christianity truly is, we start to think on much longer of a time horizon. We start to think in terms of what's happening on the spiritual plane within our spirit, right? What's our intention? And I think the same thing is true with Bitcoin, right? In the fiat world, we think about, so many of us, I'm one of them, living month to month, right? So many people are on that hamster wheel. You can only think maybe a couple weeks ahead or a couple months ahead. There's only a handful of folks out there that have the opportunity to think, man, what can I create in 5 years? And I think that we all have the ability to sit down and do that, but the incentives, the economic incentives are so heavily misaligned so that isn't a natural thought process. So I just wanted to throw that up on the table real quick.
I think we're having a great conversation. And you said that you guys are both recently married. Well, here's my advice to you. Have as many kids as you can. That is an eternal being. So that right there should just be like, boom. Oh my goodness. Like
it is. Yeah. No, that's
what can I do? What can I do? Well, number one, you can serve the Lord, and through the power of the Holy Spirit, you'll accomplish the works that he has for you. But children, that's it. And what was vibing in me when you said that was the depopulation agenda. They are literally, look at what RFK said. They are literally poisoning us. They are literally killing us off because they think that we live in a world that doesn't have enough resources, and we're taking away all of the. I mean, I saw a post where all 8 billion people could fit in like the state of Texas without any issues. Now there'd be infrastructure issues for sure, but like we could all fit there, right? So like, imagine how much Earth there still is even though we have 8 billion people. So this idea of depopulation, I think Elon makes a good point with this. Like, we need to we need to make as many babies as we can. We need to do that. So on the physical level, yes, we need to do that so that we can bring them up and, raise your kid in the fear and admonition of the Lord, and he will not turn from it. He'll come back. The Lord will keep him. We need to do that. But at the same time, you start to ask yourself, okay, well, that's the spiritual plane, right? I can create this being. I can create this. I can bring a kid into what? Like, it still baffles my mind. I'm 3 kids deep and I'm still blown away by it. I can't figure it out. It's a miracle. Life is a miracle. And shame on those who don't understand that, or who despise life, because life is so precious. It's truly a miracle. So that would be my first thing to you. And then my second thing would be, now, what can I do in order to ensure my family doesn't have to be on that hamster wheel? And I think that's a lot about what Bitcoin bonds are about. I've gone in and out with it, but kind of final nail in the coffin with it here. If Bitcoin has a 60% compounding annual growth rate over the last 10 years, 60% CAGR, yes, you get stuck in this mindset where it's like, hey, why would I do anything else? Because it's not going to beat 60%. I mean, nothing's beating 60%. Bitcoin is the best performing asset in the world. And how do we leverage its performance? That's kind of like the question that Bitcoin bonds answers, because you still need a cash flow. It's sad. That's the reality we live in. You need a cash flow. If you didn't earn cash, then what would you do? You'd sell your Bitcoin and get hit with huge capital gains. And maybe you earned some cash. You spent your money on expenses, and then you bought some savings, right? But then you have to liquidate those savings because there's an emergency or something like that. And now you get hit with short-term capital gains instead of long-term capital gains. Now you're really getting wrecked and demolished through this. So that whole process really hampers, what we can do with Bitcoin, except when you turn it into a bond product, except when you turn it into a lending product, because now we're talking about interest earned instead of capital gains. And if you don't do anything else, this could be a way to kind of escape that hamster wheel, get out of that debt slave cycle, because the best performing asset in the world is now producing your cash flow for you, right? Because if you lend $1 million into the bond, 800,000 goes into the treasury, 200,000 goes into Bitcoin. Well, at the end of the maturation of the bond, you get your $1 million back through the treasuries, through the maturation of the debt notes. But what's left over is Bitcoin. So even if Bitcoin goes down, which there's no precedent for Bitcoin to go down over like a 5-year period at all. Maybe in 5 days it can go down 50%, but not in 5 years. It's engineered money. It's number go up technology. It's not going to do that over a longer period of time. So what you do is you take that performance and you turn it into cash flow. You take that performance and you use it to empower yourself and your quality of life and your standard of living. And what it does is, instead of you taking your Bitcoin and borrowing against it, you're lending to another. Michael Saylor just talked about this. What problem does MicroStrategy solve? Right? Because there's a businessman in China. He is not allowed to buy Bitcoin. He is not allowed to do some of these things that other people are allowed to do. But he can lend his money to MicroStrategy, and then MicroStrategy takes that money and buys the Bitcoin, and it becomes a levered play. It gives them exposure to Bitcoin. But it also creates a little bit of risk, because if the price of Bitcoin goes down, then the principal value of your investment can go down. Now, it's not going to go down tremendously because they're convertibility notes, right? You're going to convert it into shares and you can just wait, but it can go down. A principal protected note cannot go down because the principal is, that's the whole point of the principal protected note. But what's left over is the performance of Bitcoin. So if we get our 60% CAGR on Bitcoin over 5 years, the price will go up 10 times. And that would be that $1 million turning into $3 million. So that is a significant gain. That is actually 40% APY. So imagine if you could have a savings product at 40% APY, how much more your quality of life and your standard of living will increase through adopting a product like this. It's the perfect in between when you have Bitcoin trapped with capital gains and cash flow products, but no exposure to Bitcoin in any of these existing cash flow products, because we haven't escaped that cash flow paradigm. You're either trading your time and energy for cash, or you're going to go broke. You need to generate cash in this society. And if you generate cash, you should spend that to pay your bills. And then whatever's left over, you save 100% of it in Bitcoin. And this is kind of just a tool to help people accomplish everything that guy was saying about how we use it Because what's so beautiful about connecting the language to the law is that it's coded law. We have now removed the human element from naming interest rates, from naming supply, from doing all of these things. And it creates a much more fair and level playing field, which then will allow people to be more focused on their quality of life and standard of living, allow them to build their families and supply for them, and kind of fix a lot of the problems that we see today in the fiat system, which are actually strategically designed to be used against us, to depopulate us, to get rid of us. I mean, it's a very sad thing to say, but it's true. A lot of these people do not like us. They want us dead. They want us gone. And that's why the system is being used against us. Bitcoin is the peaceful revolution to use a system that will empower you instead of taking away from you. There's that value delivery instead of value extraction.
That's interesting. Okay, so digging in a little bit on the details of the Bitcoin bond, because I think this is interesting stuff. So you talk about the principal being protected. Let's say that we want to do around $1 million. You said, in your example, it's kind of an 80-20 split there. I'm assuming that because you said that in that 80%, that goes to a traditional bond in terms of how we think about it today, right? I would assume, though, the principal amount, the portion of the full principal investment that would go toward the traditional bond, how we think of it today, would be also based upon what that current interest rate is, so that at the end of the term of that note, bill, note, or bond, whichever one it is, that total return, including interest, equals the principal, correct?
That's
okay. And then, so then the difference that goes to Bitcoin, let's assume that it goes up X amount, whatever we want to say that number is. Does all of that Bitcoin then go back to whoever bought that Bitcoin bond? Because the government then at that point, they're making their money on the borrowed money, because they're getting to spend today that was my capital. Okay, so is that correct? Do I have that right?
Yeah, but the Bitcoin doesn't go back. The Bitcoin actually gets liquidated. The Bitcoin gets sold, and then the dollar amount is then distributed. So you have interest earned versus capital gains. But what's so important about it is that, yes, your principal is protected, but let's say Bitcoin goes down 50% in 5 years. You had 200,000, now you have 100,000. That's 10% over 5 years. In simple terms, that's 2% APY. So when interest rates go back down to 0 to 0.25 on the overnight rate, and bonds go back down to around 2 to 3, even if Bitcoin went down 50% over 5 years, you'd still be keeping pace with those bonds. So depending on the amount of money they printed, you might also lose in real terms. But the point is that that's a doomsday scenario, right? If Bitcoin does what it's supposed to do, the whole idea of the product is you can now lend your money and outpace inflation, because Bitcoin is going to perform. The more inflation there is, the higher the price of Bitcoin goes. So, it's right there. It's designed that way, right? That Bitcoin has to go up in value when the dollar gets inflated. So as that happens, it protects your purchasing power. So you can actually store your value in a cash flow vehicle rather than an investment that is open to capital gains. It's just a different way to store your value. It's a hybrid model to store your value, but store your value in a world where we are making this transition. Like you said, we're in this middle ground. We don't have a Bitcoin standard. The dollar isn't dead. We're in this such a weird time frame, because we're only in year 15 of a new emerging digital asset class that is an engineered money, the most pristine form of collateral in the world, and we're stuck in the middle. And one of the ways that you can empower and benefit not only yourself as an individual, but going back to what I was talking about, Social Security, you could recapitalize Social Security. You could recapitalize the Republic with this type of product, because the product is going to create a yield that is greater than inflation, because Bitcoin is always going to outperform inflation. And then as that happens, you can basically come through on the promises that you made. $217 trillion of unfunded liabilities here in the United States. We could fulfill those promises. But do you know what that means for Bitcoin? Multi-millions of dollars per Bitcoin. So that value isn't just created out of thin air. It's just transferred from one medium to another. So you want to be positioned in Bitcoin as your savings, and then you could leverage some of these cash flow products so that you don't have to sell your Bitcoin. Because I really don't think anybody should be selling their Bitcoin. Not where we are right now. We're in year 15. We're at the bottom of the S curve. Price is still moving relative to its cost of production based on the proof of work consensus and difficulty adjustment. We are nowhere near full adoption. When we get to full adoption, things will be much more stable. Jack and his team will be able to say, okay, maybe we're looking at a 4 to 5% return on investment, because what the value of Bitcoin is global GDP divided by 21 million. And global GDP is not going to go up and down by those big drastic numbers. It'll go up 2, 3, 4, 5%, or down 2, 3, 4, 5%. And so too will the purchasing power value of Bitcoin after mainstream adoption and things start to finally settle out. But right now, the upside is just ridiculous because we're at the beginning. We're in year 15. Think about gold in the year 15. We are in the year 15 right now. So there's so much that can be done and that will be done through this process of adoption, that when we finally get to the point where we're at the top of the adoption curve, the opportunity that we all have now will be gone. And I said this on a Bitcoin Sessions, Why Are We Bullish podcast. And I said, the opportunity in Bitcoin right now will not exist later on. But that doesn't mean the benefits won't exist. After full-scale adoption, you will still be able to properly store your value, but you will not be able to benefit from an emerging digital asset class, from a huge transfer of wealth from a dying system to a new emerging system. So we have an investment opportunity right now in Bitcoin because as this asset class continues to emerge, tremendous amounts of wealth are going to be transferred into it. And that means that there's potential for capital gain. But after we have mainstream adoption, yes, you will still benefit. The last person to join the Bitcoin network will still benefit and still be able to have secure value and store value of their time and energy through space and time. No problem. Absolutely. Those benefits aren't going to disappear. But the investment opportunity, the opportunity to not only get you off of the hamster wheel, but your family and their kids get, like, I want my picture in the Citadel. I want me and my wife a picture in the Citadel. Oh man, there's Grandpa CJ, man. He bought Bitcoin when it was $200. That guy's crazy. Everybody thought he was great. But you know what? I love him because he changed my life. Right now is the opportunity to do that because we're in the beginning of the adoption process. So that's an important thing to distinguish between, because that same opportunity isn't going to be around forever. And we don't know how long this process is going to take. I know you guys, you watch my content, I say this all the time, but I want to reiterate to your listeners, the only difference between inflation and hyperinflation is trust. Once trust is gone, the dollars will lay worthless in the street. People ask me all the time, what's the difference? What's the difference? All through time, whether it was Rome or Greece or Weimar or Venezuela, it doesn't matter because it's different in every single economy. It's different with every single society and culture. But what's same across all of that time and all of those different settings is the loss of trust. And if you look in Venezuela versus Argentina, Argentina has printed a lot of money. They've probably printed enough money to create hyperinflation. So why hasn't it happened? Well, the answer to that is that the people still trust the government, right? You look at what the elections in Venezuela, Maduro won, but nobody believes him. There's no trust remaining, so their currency remains worthless in the street. You look in Argentina, Milei won. Well, everybody trusts the government, and they have not hyperinflated. So the only difference between inflation and hyperinflation is trust. And nobody, I don't care who you are, nobody knows that moment when that final straw is going to be pulled and fall off the camel's back. But I think we're, what we talked about earlier in the show, what's going on politically, what's going on between families, the drastic divisions that we're seeing, all of this creates a scenario where trust is very, very delicate. And if trust is lost, we will transition from inflation to hyperinflation. And to be honest with you, I hope that does not happen. I do not want that to happen. As an American citizen, I want to see Bitcoin as a peaceful revolution be integrated as the Trojan horse and slowly make us better over time as people continue to learn about it. And that saying comes true. You don't change Bitcoin, Bitcoin changes you. Well, we need time for that to happen. And I think that's going to be a more beneficial thing for society and for the world if we can see that happen versus a hyperinflationary moment where people are forced to ditch dollars. They're laying worthless in the street. The union is split. I mean, all of that could be happening in the next couple of months. Who the heck knows what's going to happen during this election? What do you guys think? Do you think they're going to steal this thing? It's my mind that they're going to steal it, but I'd love to get your opinion on that.
Oh, there's just a litany of answers. You know what I mean? Yes. Cheating happens in any sport, and politics is a sport, but I think the cheating's been going on for a long time. I've chosen to just I love staying in it on the day-to-day because it's entertaining for one. For two, you know, you get what you pay for. So some of me with the Kamala thing, it's also like kind of walking this like tightrope economically speaking. We do not need this lady in office. Like she's not the one, but like, I don't know. Like they're literally willing to cheat to put her in because Joe Biden was like shitting himself and he won. Hillary Clinton didn't really win the DNC. A lot of Watergate is a ruse. I mean, how far do we want to go back? It just on and on and on and on. I mean, even the Federalists versus the Anti-Federalists or the Democratic Republicans, right? I mean, like what was going on there? Why did Alexander Hamilton and George Washington happen to just love the whole banking thing? And why did the real founding fathers happen to not like them? I mean, it's forever, you know? So no, it's fake. I hope Trump is legit. I mean, on the whole political take, but I was going to say this earlier. You know what? Fuck it. I'm running in 2032. So we're going to get rid of the capital gain. All right. How about that? So let's start the conversation from there. I'm coming in 8 years anyway. So just hold the Bitcoin. We're going to eliminate all the taxes in general, but especially the capital gains on Bitcoin. We're going to fund it some other way. We'll figure it out because I think the funny thing was, you know, it's funny. The only take that I like listen to from people are people who understand that we don't need to fund this government the way we do for society to operate and have a government that works. We actually just need a really small government. And I like your gradual situation. It's just that unfortunately in history, nothing happens gradually. So I think my take is that whatever is going to happen in November, even if guys like G Money are like, that could be the straw that, you know, breaks the camel's back. Maybe. I mean, like I haven't been around long enough to probably give a well-educated take on why this particular time would be the time. They say that every time. They say it every time. And I want to believe it too. Trust me, I'm listening to this stuff every day and I'm like, this is it. Like if Trump doesn't get in, like, oh, this is, I mean, but you know, they're sneakier than that. Inflation is sneaky. It's very sneaky because it is a phenomenon that we're trying to say as Bitcoiners, we kind of understand it. We understand the inflationary phenomenon. There's a use case for it in some respects there's not. But at the end of the day, for the last like 2,000 years, there's a little group of people that really, really understand interest rates and inflation. They're way smarter than everybody else. We keep dealing with these same people. And I think that is the financial revolution we're talking about. So, you know what? Fuck the election. It's entertaining. I kind of hope Trump wins because I hope that it's gradual. But shoot, if the other sides win, great. Like we said earlier, I have insurance on it. That's why I buy it. That's why when I go to my in-laws, I go, you guys need to buy Bitcoin. They're like, why? I'm like, to protect you from all that. It's the only thing that you can buy that doesn't expose you to that. And quite honestly, that's the most risk-off thing there is in the world. Regardless. I mean, they could adopt Bitcoin and do it. Still, the best thing to do would be to self-custody as much Bitcoin as you can, as profitably as you can, and protect that. Right now, I protect it with the savings account or an emergency deposit in fiat because I'm not Jack Mallers. I don't have access to just unlimited money. So I can't just like forego the whole dollar thing just yet. But I see the transition. I see it coming. And my take is that they stole the last one. You know, I think Republicans are kind of wussies from my understanding of politics. So I don't know if they cheat quite as much, but I'm sure there's cheating on both sides, to be fair. And this time, oh yeah, they're gonna try to steal it. I mean, the guy got 79 million votes and lost. That's insane. Like if anybody understands politics, they understand that Trump losing last time was like literally insane. Like mathematically does not make sense. Like it's literally, if that was the, I mean, like if that's the black swan event, that's the black swan event. The 2020 election is like the black swan event of like the century because it culminates so many things from an economic perspective that so many people are missing. And that's why I think it's so cool to have these conversations with Bitcoin focused people because Bitcoin touches everything. I mean, it's just money. So like you got to get interested in other shit, or in your case, you got to figure out how to build solutions within the current system because I'm probably not getting elected in 2032. Unfortunately, this country would be great. I'm probably not. So I'm glad there's people that are working on the current framework of the system as opposed to like some of the G money stuff. Yeah, you got to work with it, you know, and I do support America. So at the end of the day, I'm not rooting for the destruction. I'm betting on the destruction. I'm not rooting on it. I'm betting on it. It is what it is. But I'm glad we have people like you.
TJ, I think that we could continue having our conversation for hours and hours and hours into perpetuity. We got to have you on again because I've got so many other notes and we touched on things and we'll just never be able to get into it in one episode. For all the people that listened to you here and thought, man, I really like that guy's take. Where can I find more stuff? What would you answer to that person?
Yeah, so the best place is on Twitter at CJ Constantinos. And if you want to learn more about People's Reserve, also on Twitter at People's Reserve. I don't really do, I have a podcast called My Two Sats, but I'm very picky with who I do it with. So It doesn't come out as often as your guys's or other podcasts, but you can go on YouTube at CJ Constantinos and find me there. And man, Griff, I just love that point about what you said, because I don't think it's priced into the treasury market. I don't think the civil unrest and everything is priced into the treasury market. So these next couple months are going to be, and I'd call it a white swan, not even a black swan, right? A black swan is like, oh, where did that come from? This is like the most, only Bitcoin is more obvious, right? I love that movie, Bruce Almighty, where he's driving in the car behind that truck with all the signs, and he's praying to the Lord. He goes, send me a sign, send me a sign. And like in front of him is this truck going, and there's all these signs, stop, pull over, stop. Yeah. And then he tries to speed around the truck and then gets into the accident. It's like so obvious because it's right in front of us and people are still missing it. But Bitcoin is that sign. Bitcoin, the performance of Bitcoin is the sign that all of your listeners should take and do exactly what you do. Tell your friends and family, because honestly, nobody in the world knows when this transition is going to take place. And if you're not prepared, look, it's better to be 1 year or even 10 years early than just 1 minute late. Because if you're late, there's nothing you can do. You are going to be trapped. So you need to be set up now beforehand. You need to be prepared now. And that's why I love doing shows like this for you guys who are reaching out to friends, reaching out to family, orange pilling the world out of love and concern, telling them, look, this might not go the best way. And if it doesn't go that way, you need to be prepared now. So thank you guys so much for having me and for letting me talk. And I'd be happy to come back and do a part 2. Very much enjoyed our conversation.
No, we did too. It was great. It was a pleasure having you on, and looking forward to the next one, sir.
Absolutely.
Griff, another great conversation. I just, I don't even know what to say. I feel like every time we have a conversation with a guest like that, I just want to sit down and take notes on every single little thing that we talked about, because there's just so much more that we could dig into there.
For the most part, Nick and I do this for our own education. It's almost like stealing. And that podcast right there is exactly why I advocate for almost anybody to try and do it. And like, we are doing it at a consistency level that is going to maintain for a long time. So you're going to hear from Nick and Griff for a long time, because we're just doing this for fun. We're never going to take an advertisement for the show. We just enjoy talking to people. And should we ever reach that level, we're not going to change. So that's great. But yeah, that's why we do podcasting right there. That was such a great education. I mean, it really was. From a lot of people that I listen to, like on a lot of shit, I would not add somebody to my podcast Rolodex unless I didn't think they were full of shit. And I just think that everything that he was talking about and mentioning and building things within the system, kind of more of a Dennis Porter kind of way, you know, you got to save the system, which I love. It was great. And anybody who listened to that got smarter. I got smarter. So that's why we do it. It's pretty dope.
Hey, if you guys are not watching right now, we do have video on Spotify and on YouTube. You can find it all at nycandgriffshow.com. That's where our link tree is. We're on Twitter. It's at Nyc and Griff Show, and all that is spelled out. NYCANDGRIFFSHOW.